Have you ever seen a day where the news is just screaming chaos and panic, but if you look closely at the facts, they're telling a completely different story? Well, let's talk about one of those days. We're going to break down April 13, 2026, a day that was a perfect showdown between the fear you get from headlines and the hard data you get from the charts.
And this quote right here, it just nails the feeling of that day. I mean, imagine this. Every single headline, every alert on your phone is telling you to sell, to get out, to run for the hills. But your system, the rules you built and trust, is flashing a big green light that says buy. That, right there, is the battle every single trader has to face. Gut-wrenching emotion versus cold, hard discipline.
So let's set the scene. Before the market even opened, the air was thick with negativity. It was like a perfect storm of bad news had rolled in overnight, and it felt like it was designed to create absolute maximum panic. And it wasn't just a feeling, there were very real reasons to panic. First up, you had a major geopolitical crisis flaring up in a supercritical oil shipping lane. Then, bam! A surprisingly high inflation report hits the market. As you'd expect, those two things sent oil prices absolutely soaring. And the result of all that? A massive wave of risk-off selling overnight, long before most traders were even at their desks.
Let's just zero in on that inflation number for a second. 3.3%. A high CPI print like that, especially in a nervous market, is like throwing gasoline on a fire. It's a signal that everything's getting more expensive and that the central bank might have to slam the brakes, which, markets almost never like. It was the scary economic data to back up the scary feeling everyone had.
So what did all that fear get us? Well, this. A huge gap down right at the open. The market didn't just trip, it basically fell off a cliff, hitting a low of 24,951 right out of the gate. Looking at that, you'd think the day was already a total write-off. Okay, so while pretty much everyone else was looking at that drop and panicking, a professional trader's job is to tune out the noise and start looking for clues in the chaos. And on this day, the whole story started with one really important number.
And that first clue is something called the CME settlement. Now, CME is just the Chicago Mercantile Exchange, and the settlement is simply the official closing price from the day before. Here's the cool part. In a really chaotic, stretched-out market like this one, that old price level often acts like a powerful magnet. It's like the market's magnetic north, constantly pulling the current price back toward it.
On this particular day, that magnetic target was exactly 25,281.25. So think about that. While the whole world was staring down into the abyss at 24,951, the disciplined trader was looking up at this number. This became the destination. The only question was there any evidence the market could actually get there?
So how in the world could it possibly reach that target? Well, you don't guess. You wait for your system to give you a green light. In this case, there were three of them. First, the crossover. This is where a short-term moving average, the 21 EMA, crosses up and over a longer-term one. It's a classic signal that the balance of power is starting to shift from sellers to buyers. The second green light was the confirmation. The RSI, an indicator that measures momentum, moved into what's known as the bullish control zone. This tells you the upward move has real strength. It's not just a weak little bounce. And finally, the breakout. The price pushed cleanly through a key psychological level at 25,100. It was like a 1-2-3 punch from the data that said the panic was probably over.
With all three of those green lights flashing, it was time to put the plan into action. A plan that flew directly in the face of every single scary headline out there.
And see, this is the real difference between just reacting and actually trading. The setup was a settlement reclamation long, a fancy name for a plan to ride the price back up to that magnetic settlement level. The entry was at 25,120, right after those three signals confirmed. The risk? Tightly controlled with a stop loss just below a key technical level. And the target was crystal clear, 25,281.25, the settlement price. No guesswork, no emotion, just a clear professional plan.
And that's really the whole ballgame right there. It wasn't a hot tip, it wasn't a gut feeling, and it sure wasn't a guess. It was the boring, disciplined execution of a plan that was defined way before the panic started. It's all about trusting your system, especially when your emotions are telling you to do the exact opposite.
So, after a roller coaster day like that, what's the big takeaway? What's the ultimate lesson when the news and the charts are telling you two totally different stories?
This slide just says it all, doesn't it?
Over on the left, you have all the noise, fear, inflation, oil prices. It's loud, it's emotional, it's chaotic. But on the right, you have the facts coming straight from the price action, a clear shift in power to buyers, confirmed strong momentum, and a powerful price magnet pulling everything higher. The left side is the story, the right side is the reality.
Which brings us to the most important lesson of the day. A professional must prioritize what is actually happening on the chart over what the news is yelling about. The news creates the environment for sure, but the chart shows you how the big players are actually reacting to it. You have to learn to trust the data, not the drama.
So I'll leave you with this question to think about. When you're in a situation with a ton of mixed signals, with scary headlines and emotional noise pulling you in one direction, how do you make a decision? Are you going to get swept away by the loud, scary narrative? Or are you going to have the discipline to find and trust your data?